thank you very much. Thank you very much to the organizers, to SteelOrbis and IREPAS for inviting me. And well, I'll try not to be very long. So we have time for the questions if you are interested in. Also the title is Spanish steel markets. I will focus in the long products steel market. So I will not speak about flats, since the audience here is mainly interested in longs and construction markets. So first of all, regarding construction sector, in the left-hand side, we can see the Euribor, the interest rates in Europe, how they have been rising really fast for the past year. Even last week on Thursday, we had a further rise of 0.25% of the European Central Bank. And the message is that they have not stopped yet. No? And this gets in line what we have seen before. So interest rates are rising. But also the bank interest rates are rising. The mortgages to the people who want to buy a house have not risen that fast so far. Nowadays, new mortgages in Spain are being signed at about 2.9% year rate, which is, as Mr. Videla said before, it is really in a real way, real interest rates for mortgages and for buying houses are still not restrictive, but they are still expansionary. So you still can buy a house and mortgage this house for a figure smaller than inflation. That's what is happening now. And what's the influence here in the market? That in the right-hand side, what we can see is the number of mortgages. It's not the amount, is not million euros, but the number of mortgages that we have been contracting every month. And what we can see is that, for example, December was a very bad month, but January and February, the last two dots in the red line, still are not contractionary. We so far are seeing that the number of mortgages is the market for mortgages is still more or less stable. But anyway, interest rates are still going higher. So what we can expect is that in the following months, we will see a decline from this level that we have reached in 2022. Probably what we will see ahead is a decline in the size of the mortgage market in Spain for the following year and ahead. Also, the ECB, the European Central Bank, has just released a survey done to the banks where most of the banks believe that the number of they will see that the people will demand less mortgages in the future than they have been demanded up to now. So probably this will be felt in residential construction. In the left-hand side, we can see the number of new residential building licenses. The gray area is the amount awarded in the past 12 months. And the orange line is just the variation, the year-on-year variation of the data in each month. So what we can see is that so far in 2022, just like it happened with the mortgages, in 2022, the size of the volume of new houses that were going to be started in Spain is more or less stable and is more or less in line with the size that we could see in 2019 before the pandemic. So what we can, so far the size is not bad, but just like in mortgages, we can expect that with the rise of interest rates and the economic panorama that we have ahead, probably this will not be able to be maintained in the near future. And the only bright spot in construction in Spain is pictured in the right-hand side of the slide, where we can see the size of the civil construction market with the public tenders that are being awarded by the Spanish administrations. It is growing really fast, as you can see. The orange line is made of the monthly data, and the dotted white line is the average of the 12 past months, no? So a year average. And what we can see is that the size has grown to a figure that has not been seen in the past decade. From the beginning of the past decade, we had not seen public figures of public tender just like this one. What is behind this? There are two situations. One of it is the recovery mechanism of the European Union, that was started right after the pandemic, and that has also continued with the war crisis. Spain, after Italy, is the second country in the Union that has received more money. Also, a big deal of this money is going to digitalization projects, energy projects, projects related with hydrogen and so on. But there is always, when there is public money, there is always a big deal of construction, of infrastructure, where money can be spent in order to foster growth. And also, there is also a very short-term issue, which is that now in May we have local elections, and in December we will have general elections. So you know that politicians always try to foster the economy when elections are coming. So both two factors have been helping to this, which, as I said before, was the first or the only bright spot that we can see right now in construction. And how does this translate in the activity? The fastest indicator we have in construction is the consumption of cement. And what we have here is also the gray area is the value of consumption of cement in 1,000 tons, so more than 1.2 million tons monthly. And the orange line is year-on-year growth. We have seen that for the past 12 months, most of the time, the consumption of cement has been decreasing, not very fast, but decreasing with the bad situation or this stabilized situation that we have seen before. And there is only March. You can see that in the last dot of the line, we have March really rising at a very different rate that we have seen before. We could think that it's just a statistical effect because March last year was very bad. In fact, it was bad because it was when after the war started only at the end of February. So March was the first month with all the uncertainty of what could happen. But if we see the gray area, that the figure for March is not only good compared with last March, but it's also a very important figure compared with the long-term series. So really March, we still don't know exactly what has happened, but the figure for March has been really, really interesting. And with this macro environment and how the construction sector, the main client of long steel products is performing, we can go to exactly what has happened with the long steel products. First of all, I'm looking at deliveries of long steel products in Spain, deliveries by the Spanish companies. The market, the first thing and very surprising is that the market has been very, very weak in 2022. The blocks in the left-hand side are yearly data in thousands of tons per month. And in the right, we have the quarterly data. And what we can see is that in 2022, the data 256,000 tons per month was even lower than the figure in 2020. And we remember that 2020 was the year of the pandemic. In Spain, we spent 3 months secluded in our houses. Construction did not stop because it was considered an important sector. But anyway, the economy went down really fast and the construction sector suffered. But we can see that deliveries of long steel products in 2022 had been even lower than that benchmark of 2020, which is really surprising. While in the first quarter of 2023, what we have seen is that there is somehow there is some recovery, not very big, but there is an initial recovery in this first quarter. If we look at imports, the other part of the market, I have separated the imports in those two colors. Imports, the orange ones are imports coming from the European Union, which are, as you can see, rather stable. The difference in imports from the European Union are not very big from year to year or even from quarter to quarter. And these imports come mainly from our neighbor countries, from the closest countries to Spain. While the imports from countries outside from the European Union, which are those colored in green, are much more variable. These imports are the swing factor, no? And it depends more on the mood of the market and necessities. And what we can see is that in 2022, the imports, 34,000 tons per month, have been really high at the historical level. You remember it was 22 was extremely low for domestic deliveries, but in spite of the gloomy market, the figure of imports was high, and with a strange profile, which we'll see later. And so far, the first quarter, which is where we have data, are smaller than the average of last year, and also smaller than several of the other quarters. And we can see that there is a decrease of 7% in these imports. Let's see. I'll come later to apparent consumption. I'll show before the pattern of imports. We all know about I suppose that you all know about the quotas in the European steel market. And because of these quotas, we have this pattern which has been happening since the quotas started in 2018, which is most of the imports come in the first month of the quarter, since quotas are managed quarterly. So each of the quarters, there's a big impact of imports from third countries in the first month, and the following months are just waiting for the first month of the following quarter. No? And those are the 4 quarters in the past year, in the 22. And also imports in first quarter of this year, which we already have the numbers. And what we can see, which is peculiar, is something normally not seen, is that in the first quarter, January did not see the rise of import that we normally see in January, April, July, and October of each of the past quarter. This was probably a sign of the weakness of the market. No? After a very weak market in 22, probably even with this rush normally to take part of the quota in the first month, the weakness of the market didn't ask for this, and so we had this very different shape. While in March, we have seen that March has almost got to the level of January, and this is something that it doesn't happen in the 4 quarters before, and if I had shown since 2018, probably most of the quarters, it would have been very difficult to find a quarter behaving like this. So this is a sign, first of all, that the market was very weak at the start of the year, and second is, a question mark about what will be happening later on. No? If markets will start to recover slightly, just like it happened with cement. I showed you in the cement slide. And also, if we don't look at the amount of tons, but also at the number of products that fulfill the quota in the first week, what we can see, for example, is that in January last year, in the first week of the quota, there were 4 products, and two of them stainless steel and 2 of them non-stainless. In long products, there were 4 quotas that were fulfilled in the first month. In April, it happened with 5, and this year, in January, it has happened only with 2. No? So that's why also in January there we cannot see. So it's clear that in January there has not happened this rush to fulfill the quotas that we had before. And with this pattern of imports and with this pattern of deliveries, what we can see is that in apparent consumption, we have a profile similar to Spanish deliveries, where also the consumption of long products in 22 was smaller than the consumption of long products in 20, in spite of the pandemics, and also a slight mild recovery in the start of the year, which has happened only in March. the consumption in the first months, January and February, has been also weak, and only in March we have seen a rise in consumption, which is the one that provides this 3% of rise in consumption of the whole quarter. So that is the profile of consumption. And what we can see is something that normally doesn't happen in March, that every product has risen, because sometimes some of the products, not all the products go in parallel, but in this case, wire rod, rebar, beams, merchant bars, all of them have risen in March in spite of the decreases that we have seen before. And finally, if we look at the future, which is something where I think that all of you want to look, there are two conflicting trends. What I've shown before is that the macro environment is really gloomy. We wouldn't expect anything good from this situation of fast rising interest rates, of economic uncertainty, of geopolitical uncertainty, and inflation harming incomes, savings, and of course the buying of residential houses by the families. But there could be, as we have seen, there could be a slight room for cyclical market recovery after this extremely bad year in 22. So stocks should be really replenished, and March could have signed a small recovery, of stocks and deliveries and so on in the market. Where will it go? If it will just last for 2-3 months, or it will have a longer recovery, it will be seen. But we have to remember that the underlying economy situation is not good. So that's all on my side for the presentation. And if you have any question, please, I'll be very glad to answer.
Thank you very much. Any questions from the floor at this point? Not at the moment. Thank you very much. Meet once again.
You're welcome.